is the September mortgage update. So if you're watching this, first of all, congratulations for making it this far in 2020. I feel like we're in a video game where there keeps on being like a new crime boss that we have to beat, right? So first you've got, COVID, that's horrible and still around. That's like the emperor of the game that keeps on coming at us. And then you've got the California wildfires. You've got Hurricane Laura. You've had all these natural disasters hitting all year that are just every single time they're like, this is of historic portion. You have the plague back. The plague is back. I'm not even kidding. Tahoe in California, they found a squirrel or a person or something with the plague. Same in Colorado. So the plague's back. It's wild. It's wild. So if you're watching this, like, let's say in 2030, right? Because who even knows what the world's going to look like then? If I said to someone, go 2020 yourself, it would not be a compliment, just to give you an overview. And also, if you guys have toddlers, you know how you, like, when my son was little, I'd be like, instead of using the S word, I would be like, sugar cookie, right? And like, he doesn't like sugar cookies now, but you can just now go, 2020, 2020. I am going to, okay. Yeah, it's a unique year. Special. So let's talk about what's happening in mortgages, because it's, I swear I say this on every video, it's like nothing I've ever seen, and it keeps on changing, and it's definitely presenting some new challenges, which we're overcoming. It's just changed the way that we do loans quite a bit. So traditionally, I would say up until a month ago, I would always say on a purchase, 30 days, no problem at all. Now, I'm not taking purchases that are 30 days or less. And the reason is it's not realistic. There's a chance I'll do it, but with the stuff that I'm seeing come up that we can't anticipate for, I'm padding time. And the reason I'm padding time is because it's really interesting for me to watch. So it's like everyone knows the mortgage industry has a ton of volume, right? And everyone knows appraisers are just getting slammed. Like in certain parts of the country, it can take 45 days to get an appraisal. Seriously, guys. And it's because they've got all the purchase business. They've got all the refinance business too. If you're in an area that's more rural, there could be 2 appraisers. Like, they are slammed. Yet sellers and realtors are still like in 2018 in many cases. Now, let me be very clear. There's some realtors who I love. I'm like, I need 40 days. And they're like, no problem, Jen, I'll get it. And I'm like, oh my God, I like tear up now. I'm like, you're so nice. Thank you for not making me kill myself. I appreciate you so much. But there are a handful that are like, oh, well, if we can't close in 30 days, the seller's going to back out. The seller's going to take their earnest money. The seller. Well, guys, if you're selling your house right now and you're that seller, you're at 2020. Yeah, guys, everyone is doing everything they can to move as fast as they can. This isn't last year. Lenders can't snap their fingers. There's so many more guidelines we're dealing with. So let me tell you a couple things that have caused delays on my files in the last month, and some advice on that. Okay, so first of all, if you're a seller, guys, expect delays, plan for it. If you're a buyer, do not book that moving truck until your lender says it's okay to. And it's because we're seeing stuff pop up that we can't even anticipate. We can't even anticipate it. And then we're having to deal with it, which can add a week or 2 weeks on. So do not book that moving truck. If you have a 25-day escrow, for the love of God, don't book that moving truck, okay? Don't give notice to your landlord until you check with your lender and they say it's okay. Don't do it. A lot of people think if they get into contract, they're going to book their mover for the day on the contract and they're going to give notice. No, no, not in 2020, kids, not in 2020. So let's talk about a couple things that I'm seeing cause delays. Forbearance, the F word. Yes, forbearance. Okay, so if you don't know what forbearance is, when COVID came out, the government basically said people could suspend their mortgage payments if they've been affected by COVID, like financial loss, something like that, right? Well, so what happened is anyone could put their mortgage in forbearance. And a lot of people in the country were like, well, why would I pay my mortgage if I don't have to? Cool. Okay, I'm a lender. Why would I lend you money if you're not paying your current mortgage? Duh, right? That's the first thing. Not trying to be mean. If you did lose your job or you had job loss and you recovered from that, I respect you. You should have been in forbearance. If you put your loan in forbearance because you wanted to buy Bitcoin or something like that, seriously? Really? Okay. So forbearance. So there's a handful of people who went into forbearance because they just thought, cool, free money, which it's not. But then there's a lot of people that clicked the link. I'm not even kidding. There's one bank where they had like an email that went out to clients that's like, if you're facing COVID hardship, if you want to know more about forbearance, click this link. And the link like automatically enrolled people. So these people were still making their payments and everything, but they got coded as forbearance. So on their credit report, it says forbearance. Now, as a lender, I have to be able to show that you're not in forbearance. So I'm going to have you get a letter and get something from the lender saying you're not in forbearance. Well, here's a fun thing that started happening. And first of all, on that note, just before we go on, I've had so many clients that didn't know they were in forbearance that I started checking my mortgages monthly because I do auto pay. A lot of us just do auto pay. And so now I'm checking every single month. I'm looking at the statements online. I'm checking to make sure my money's coming out because there are legitimately people who are being put in forbearance. They have no idea. And if you don't watch auto pay, which some people don't, like, you know, maybe it just depends on your banking. Like if you have a ton of money in a bank account, like you're not going to be watching every transaction necessarily, right? But I've had people who didn't know they were in forbearance. The bank stopped taking their money. They didn't notice. And it's a problem now. It's a problem because even if the bank says they put them in there accidentally, as a lender, we're like, well, but you didn't make your payment. And lenders don't like, it's hard for them to understand like, how a person could miss it. Like I know how a person could miss it because I talk to everyone every day. Like no one looks at their bank statements, but from an underwriting perspective, it raises a red flag. So if you're thinking of buying or refinancing, guys, make sure you're not in forbearance. Okay? Check your statements. Now, if you're working with a lender and they say, oh my God, you're in forbearance, what the hell? Just, you need to call your lender immediately, get a letter saying you're not in it, and then get ready to prepare to show us 12 months of you making your mortgage payments on time. Look, I don't want to deal with it. It's horrible. It's more guidelines for us, but we have to do it. So be aware. This is happening to people without them recognizing it. Yeah. I mean, I've had a couple transactions recently where in the middle of the transaction, we've got an alert because now we have like an alert system, thank God, that says, alert, this has a forbearance, because some mortgages are randomly going into forbearance when we're in the middle of the transaction. And I'm calling the borrower and I'm like, dude, what's going on? And they're like, no, I'm not. And I'm like, I just got this notification. Here you go. And they call their bank and they're like, I had no idea. Yeah, so that can add a week, 2 weeks to the transaction because we have to sort with that, right? We've got to talk to the other lender, get the letter, get the proof. So if you're a seller, no guys, there can be delays for stuff that these buyers can't control. Okay, so that's the big one. And I apologize, this is a long video, but there's a lot of stuff going on. Number 2, CAVER's number. What is that, right? Credit agency reporting, I don't know. Jen A on my team could tell you exactly what it means. She knows all the acronyms. I don't. I know that it's a problem. So basically on every government file, we have to pull your information to see if you're in default on any federal debt. Now, everyone, you need to understand that when you're filling out the application, it asks you in the declarations, are you in default on any federal debt? And if you say no, we're not usually like worried. But what's happening right now is we're pulling these CAVER's number, I'm sure I'm mispronouncing that, and we're seeing people are in default. And we're like, what? Like, I've been doing this a long time, I say that a lot, but I've had 2 in the last month, and I hadn't had any issues before. So I don't know if something happened with their reporting system. So in one case, it suddenly marked a gal's student loan, which she had paid off in full years ago, as being in default. We don't know why. So she had to jump through all these hoops to get it fixed. 2-week delay, 2-week delay, you know, and if the seller doesn't want to extend, there's nothing we can do. We had a delay because of this. This is hard to fix. Another borrower, same thing. They stopped taking his payments because of the CARE Act, and now he's in default. I don't even know. That one's just so complicated, but we're stuck. We can't do anything because you can't be in default on any federal debt when you are using a government loan. So for my VA buyers, my FHA buyers, USDA, this is important, guys. If you've ever been in default on your student loans, you need to tell us when we're pre-approving you, because I'm at the point that I'm going to start pulling that number on all pre-approvals, I think, because I feel like something switched in the reporting because this is so unusual, so unusual. So something like that can cause a delay. Self-employed borrowers. Man, I feel for you guys. Like, I'm so sorry, guys. Like, you guys were finally getting some good loans, like the bank statement programs, things were looking good. You were getting 1-year tax returns. And then 2020, Fannie and Freddie came out with some new guidelines for self-employed borrowers that hit in June. It's worth Googling. It's brutal. It's brutal. I would add 3 weeks for it. Like, any self-employed borrower, we're not pre-approving them until they go through the new requirement. And that's because we're seeing so many denials. Yeah, so many denials. So basically, you've got your tax returns, but now we're also going to need a year-to-date profit and loss. If you took any PPP loans or anything like that, we have to know. There's this complex calculation. We need bank statements as well. So we're looking at your profit and loss, your bank statements, putting it all together in this calculator and seeing if you pass. Okay, well, if you're self-employed, the odds that you make the same amount every month and your expenses are the same amount every month and it perfectly averages out is zero. So we're finding ourselves in cases where, like, we say, hey, we need 2 months bank statements, and it turns into, actually, I'm really sorry, we can't do your loan. Or it turns into, hey, I think I can pull this off, but I need a year of bank statements. And I say this to every single self-employed borrower. Guys, if your income has declined this year, tell me now. Tell me now. Because there's no way around this new guideline. If there was, I would be not doing it because it's horrible. It takes my team, every time we have a file that's self-employed, 2 hours. 2 hours. One person on my team is spending 2 hours working on trying to get that calculator. 9 out of 10 times we need more documents to fill out the calculator. Seriously. And then we're coming back to the borrower, you, saying, hey, we need this. Hey, we need this. Now, the odds that anyone even actually knows how to do a profit and loss for a way that's going to fit this calculator is like 1%. 1%. So it is adding so much time, so much work, so much angst. So for my self-employed borrowers, I love you guys. I feel for you right now. If you're not in a rush to buy, this is not your year probably. Unless your business has been booming and you are a bookkeeping genius, this is not your year. I have heard there are some credit unions doing some portfolio products where they do not require this. So if you're listening to me talk about this and you're like, oh my God, this is horrible, right? It is. Check with the credit union before you call us and see what their policy is, because we're at a point where we're just like, I really hope this guideline goes away because it is the most brutal thing I have ever seen. Yeah, it makes government loans in 2008 look easy. Yeah. Okay. So self-employed's horrible. Covered. Caver's numbers are my nightmare. Yes. Forbearances that never go away. Kill me now. And what else? Oh, volume. Volume's huge. And then just to circle on that. So if you guys are watching this, I want to be really honest with you. Do not fill out an app with me if you need to close your loan in 30 days. I am not the right lender. I want to work with everyone I can. I want to help everyone I can. I want to, do everything I can to make sure everyone has a great experience, but I can't do it. I can't do it right now. September 2020. Hopefully I'm singing a different song in the future. For our refinances, which are taking 75 to 90 days, seriously, we started a book club. I don't know what to do, guys. I want you to be happy and I don't want you to be miserable, but it's 75 to 90 days. So this month is Finding Freedom. Yes. So we're going to be sending out Finding Freedom to our clients who are locked this month. Just as like hey, this is going to take forever, but maybe you can help me understand why you would ever leave a castle, because I'm a little confused on that. If you got me in a castle, I would never leave, but that's my ignorance talking. I'm sure I'll discover after reading this. So that's the September update. Oh, one more thing. So Fannie and Freddie came out last month in the middle of the month and they said they were adding a 0.5 point hit to all refinances. Google it. It's amazing. So basically in the middle of the month, they said, hey, we're going to charge 0.5 point on all refinances effective on loans closing September 1st and afterwards. Okay, so what does that mean? If you have a $600,000 loan, they just added a $3,000 charge to it. Yeah, they just added a $3,000 charge to it. Seriously, if you're refinancing, you are now being punished. Yeah, that was the message. And so everyone freaked out. The government got involved. Everyone got involved. So they've delayed it now until December. But what you're going to start seeing is you're going to start seeing lenders tag it into the pricing. I would say probably end of September, beginning of October, because of how long it's taking to close loans. If that hits December 1st, right, they need to make sure that that's priced in, because lenders can't afford to suddenly make up half a point in the loan. Like, I mean, maybe there's some, but I know I don't have any padding in my loans. I mean, my company might have a bit, but it's lean. So that's happening. Keep an eye on that, guys, because that's going to get very political around the election, which I think is super interesting. So I hope this has been helpful. Look, overall, is it a good time to refinance or buy? As long as you have a sense of humor and you're patient, the answer is yes. If you are impatient, you need everything right now, it's gonna suck. Yeah, it's gonna suck. So thank you for watching. Questions and comments. I'm actually, because of how many emails we've been getting, we're now at the point where we're like, if you want to talk, please pick a time on my calendar. I'll call you back, or Jen A on my team, Julie, Alyssa, Sam. Like, we have so many cool people on our team. And fun fact, they're all super savers. So I'm going to do a video coming up about their savings tips. I am not. They are, though. So I thought that'd be fun. I hope you guys have a great week. Thank you for watching this incredibly long video. Bye.